entity, right, can easily set up a unit in GIFT IFSC to serve their global clients, right? And they can, of course, also serve their IFSCA clients from GIFT City, right? What we are trying to say is that if they serve their global clients and IFSCA clients from GIFT City, then there's a very promising tax saving avenue, because as we discussed that there's 100% tax exemption on the business income that any unit makes out of GIFT IFSC. So this becomes a great use case for Indian Techfin entities to kind of explore GIFT IFSC to serve their global clients, right? And as you can see, IFSCA, the GIFT IFSC ecosystem is also now pretty robust, with more than 900 entities already operating. So there's a great ecosystem there also, which is which in the financial services sector, which also can be served from the GIFT IFSC unit of this Techfin entity, right? So these the already existing players in GIFT City also may require Techfin services, which can be served from the GIFT IFSC branch, and taking the benefits of no GST, 100% income tax exemption, and of course no MAT as well for a company setup. So this is one interesting use case which is worth exploring. Quickly.
Hi Priya, sorry,
Yeah.
just one moment. Yeah, the deck is not visible.
Oh. Is it visible now?
Yeah.
Okay, I'm so sorry. So did y'all, I mean, did this slide appear?
No.
Oh, it didn't appear?
No.
Oh, okay. Sorry. So just quickly, what I said is just there in this slide, where quickly just to recap, what we are saying is that Indian Techfin entities can kind of look at setting up something in GIFT IFSC to cater to their global clients to take exemption of this income tax exemption and also GST exemption, which will apply to them. And quickly touching on the fee structure for Techfin entities, there's a $1,000 application fee, $2,500 registration fee, and the recurring fee is a flat fee of $2,500 annually, and there's a conditional fee based on turnover, which ranges from $0 to $10,000, right? So that was about Techfin. I'll hand it over to Dario to kind of take you through the payment services framework.
Thanks, Priya, for a very detailed explanation on what GIFT IFSC is, and for very nicely explaining the difference between what is TechFin and FinTech, since that is something which people usually get confused with and use the terms interoperably. So, as my colleague Priya mentioned of the evolving fintech and techfin use cases within this GIFT IFSC ecosystem, one of the very much evolving use case within the fintech ecosystem is the payment service provider regulations which the IFSCA had notified in 2024, which is a very promising regulation comparable with the likes of Singapore and DIFC. Just to give a context to everybody about what these regulations are, and these regulations have been brought in by IFSC with the intent of promoting players to set up their presence in GIFT IFSC for providing tech-enabled cross-border payment solutions to both non-residents as well as for residents. And for that reason, once this is live, there will be a tremendous traction on this side, since this will enable the digital side of cross-border payments, making the turnaround time quicker. Now, as we dive deep into the broad framework of PSP regime, so the requirement for an entity to apply as a PSP uh, provider is strictly limited foreign company form, meaning thereby the applicant has to set up an entity in GIFT IFSC as a private limited or a public limited company and not as a LLP. So this is one of the stark difference when compared with the existing fintech Techfin regime. Also, as to the eligible service recipient, here the PSP players can cater both residents and non-residents, including entities in IFSC, but it has to be ensured when the customer is a resident individual based out of India or an Indian entity, then the payment solution should not route such funds again back to India through GIFT IFSC. Now going on to the second aspect, that is the substance requirement. Again, similar to the other frameworks in GIFT IFSC, that is fund management, fintech, ancillary service, even a PSP player is required to have a principal officer who shall be the key officer based out of GIFT IFSC and responsible for looking after the overall business operations of the PSP. While the compliance officer shall be the person who shall be responsible for looking after EML, CFT, and other compliance activities so far as PSP's GIFT IFSC operations are concerned. Then one interesting requirement here for the PSP player to establish presence in GIFT IFSC is to ensure that the client related data is stored within the GIFT IFSC office that they have by adopting appropriate IT and risk management policies. It needs to be noted that even for EML CFT purposes, the PSP entity is required to maintain the transaction log for all the remittances facilitated either into India or outside India for a period of at least 10 years. So these were some of the important key criteria under the PSP regulations which an applicant desirous of setting up their presence in GIFT IFSC should take a note of. Now, as we move on to the type of services that can be offered under this regime, it would be interesting to note that the regulator has covered all possible technology-enabled payment services under the type of permissible services here. The first one being account issuance services, meaning thereby this is kind of similar to a neobank in India wherein everything is technology-enabled and backed by a nodal bank. Under this service, a client can avail a technology-based digital banking account with a PSP provider, which in turn would be backed with a nodal IBU in GIFT IFSC, and from that account, the client can remit funds anywhere globally and in India both. The second is cross-border money transfer services, which enables the transfer of money into India and from India to overseas and from overseas to overseas through this tech-enabled platform that the PSP players offer here. The third is e-money issuance services, which is similar to a Paytm wallet, but in the context of GIFT FSC, this is something to do for a global usage. So the a dollar denominated wallet for foreign tour purposes or some medical expenses is what can be offered under this kind of e-money issuance services. The fourth is escrow services, which is a very widely evolving use case because more and more people prefer to have a escrow service based out of India so far as the India side of deals are concerned, and the transactions are generally in foreign currency. So this kind of helps solve the requirement rather than going for to jurisdictions like Singapore or Dubai to avail such foreign currency denominated bank account escrow services. The fifth one is merchant acquisition services, which allows the ESP player to enter into contracts with merchant on behalf of its client for accepting payments of its client directly on the PSP platform. Again, if you see all the list of permissible activities, you will notice that the intent here is to promote digitalization of payments in all form and manner. Now, as we move forward, we will also discuss the use cases that are emerging out of these permissible activities. But before that, it is important to note what are the net worth requirement for a PSP player intending to set up their presence in GIFT IFSC here. So broadly, the regulations classify the PSP players into two parts. One is the regular PSP, while the second is a significant PSP. So the entities who qualify as a regular PSP are required to maintain net worth of a nominal 100K USD at the commencement, and thereafter till the end of 3 years, they have to fulfill the net worth at USD 200K. For the entity which qualifies as a significant PSP, it is USD 250K at commencement and then USD 500K till the end of 3 years. Now, what qualifies as regular PSP and significant PSP is discussed below, wherein if you see, if the PSP player is processing transactions exceeding 2 million for any one activity or 4 million for aggregate of all the activities that a PSP player is providing during a particular financial year on monthly average basis, then it would qualify as a significant service provider. While for a PSP which does not exceed that limit, it would qualify as a regular service provider. It is important to note here that these limits are to be considered qua each activity, excluding the volume of activity derived from e-money account issuance services. For e-money account issuance services, the calculation criteria is bit different here, wherein you have to do a daily average for a particular financial year, and if such average exceeds 3 million US dollars, or if it is expected to exceed 3 million US dollars, then a PSP would qualify as a significant PSP, otherwise it would qualify as a regular PSP. So if you see, the regulator has also very carefully drawn a line between a regular and significant PSP so as to promote the new age startups enter into the ecosystem and test their business use case and go to market, which would help them then scale significantly in times to come and then classify themselves as a significant PSP. So that way, the regulator has also considered the ask of new entrants to test their business use cases. Now, as we move on to the next slide, we will be now discussing various use cases that are evolving out of this PSP regime and what the current players who have already registered here at GIFT IFSC intend to offer as a solution or business use case. Then if you would see in this deck, where first one is the Zinc Money, who have registered as a PSP service provider. But apart from PSP, they also have registered as a broker dealer and finance company. A question would come to your mind then why they are also registering as a broker dealer and finance company. Then the answer to that question is they want to enable a overall ecosystem through their tech enabled platform in GIFT IFSC, which would cater to the clients for a one-stop solution, wherein under this licenses they intend to provide stockbroking services to its clients through their platform. They also intend to provide money issuance or money remittance services to their clients through this platform. And apart from these two services, they also intend to enter into an slightly new and interesting business, that is education loan financing to the Indian students who are exploring their further education abroad, wherein what they intend to do is firstly they would be raising funds by way of issuance of foreign currency denominated bonds here at GIFT IFSC, which would be listed again on IFSC stock exchanges. The proceeds of such bond issuance would then be utilized to lend money to the individual students who are onboarded as a eligible borrower by Zinc Money on its PSP platform, and such proceeds would then be utilized by students to pay off their fees for studies at overseas universities. By this way, they are planning to integrate the entire loan availing module as a tech-enabled platform in within one umbrella. Second interesting use case is for USD denominated fixed deposit which one of the player intends to operate and has also started to onboard clients is Belong. What they do here is they offer a fixed deposit product which is denominated in USD to non-resident clients who are based out of UAE currently. For now, they have limited their client outreach to UAE for KYC norms and requirement to satisfy the client onboarding norms. Once they onboard the client, this platform offers a predetermined FD maturity period on which the client earns a fixed return, that to a dollar denominated return. And the third important aspect to this use case, why this might go large, is the interest which is earned by the non-resident out of the fixed deposit held with the PSP player is not subject to any withholding in India. So that is kind of received tax-free from India, and also the rate of returns on FDs offered by this PSP player are slightly higher as compared to the other uh, recognized global financial jurisdiction. The third use case which is emerging is for treasury management of a large corporate house having dealings in multi-currency export, imports, receivable and payable, wherein the PSP player intends to offer a centralized treasury management solution which is tech enabled for the clients, wherein they can just raise a inward request for a foreign client to receive money on that platform, either in any of the specified foreign currency. Say, for instance, there is one Indian company which is opening their account with GlomoPay. Then that Indian company has an export receivable of USD 100 from a UAE based company. It will receive that USD 100 in that tech platform account. Then it also has a $10 payable to China. Then it will just straight away settle that $10 payable to China from that platform itself. Going on with that example, say for instance, if the client is also having a payable in pound to a UK based entity towards some import of services, then on this platform, the Indian company can straight away ask for currency conversion of USD to GBP and then ask for settlement of the payment of that UK based entity. This way, it streamlines the multi currency settlement requirement and reduces the transaction settlement time. One, so this was for GlomoPay. Now, as we move on to the other emerging use case that is being offered currently is by Ind Money. If you have heard of, they already have a presence in India mainland wherein they were offering clients with an investment avenues to invest in rupee and have the exposure in US based stocks. Now with PSP license, they intend to do similar offering wherein they will allow the clients to invest in foreign stock exchanges and foreign stocks through this tech platform by onboarding both Indian and global clients. We have also charted down some of the use cases in a diagrammatical manner for ease of understanding in the ensuing slides. The first one being the education finance by PSP player. So as you see, what is the starting point here for a transaction or the movement of fund flow? Then it is starting with the Indian student who intends to avail education finance or loan from a PSP entity. So the Indian student would be approaching PSP entity. The entity would firstly be doing onboarding and KYC check. After screening and eligibility test satisfaction, the Indian student would be offered an account on PSP's platform. Thereafter, finance company, which is again owned by the same group of PSP entity, would offer the loan equivalent of equivalent amount to the PSP entity's IBU account. Then from that IBU account, the loan would be settled for and on behalf of Indian student with the foreign university directly. And thereafter, Indian student would be repaying the principal and interest amount on a monthly basis as and when the payment is agreed upon. So this is broadly the use case for education finance by PSP. Here it is interesting to note that the concept of nodal bank is just to act as a safeguard stroke escrow mechanism and not allow PSP to handle the client money on its own rather than have an independent IBU of its reckoning who would manage the fund movement part for and on behalf of PSP entity. The second use case that we already discussed is the NRI USD fixed deposit, wherein the NRI in UAE would be opening an account with PSP entity in IFSC, depositing equivalent foreign currency from their UAE or any other foreign bank account, and on that deposit, it would be earning periodic interest income, which would then be repaid from the PSP entity's platform to such NRI. The next use case here is global collection and cross-border payouts for multi-currency treasury management. Again, here also the use case is pretty simple. The client or the customer who wants to receive payment from a foreign party would raise a request on the PSP platform on its own account to receive so and so amount from a foreign party's so and so account. The foreign party would remit the money to PSP platform. PSP platform would be processing that payment and then transferring it to the account of Indian party on the PSP platform itself, which can then be utilized for other import payables, or if there is no such import payables, then that can be repatriated back to the main bank account as well. The other emerging use case that we discussed was investing in global securities, wherein a NRI investor can open a stockbroking account with PSP entities, stockbroking entity, and on that tech platform of PSP entity, the NRI investor will be then placing a purchase order for purchasing stocks or any other securities which are listed on IFSC stock exchanges or global stock exchanges under global access program, and then puts the purchase order and procures the relevant security in lieu of the money that were deposited in that demat account. After that, similar to a Zeroda, this mechanism also operates wherein after squaring of the position or transferring the security at a later, then the net surplus can be withdrawn from the PSP bank account to its the foreign bank account. So this is kind of similar to what we do in on Zeroda in the Indian context, but here you get the exposure in global securities. Apart from NRIs, even resident individuals and Indian entities can also explore investing under this route, but there they need to factor in the LRS limit of USD 250K, which is also having an TCS burden of 20% for the individuals. So that is one pain point. The other aspect of PSP is the regulatory fee, which is quite high because the application fee is linked to per activity. So for instance, if an entity is desirous of providing cross-border payment services and e-money accounts issuance services, it has to pay an application fee of $2,000 first to IFSCA upon filing of application. Then once the IFSCA grants you an in-principle approval, the entity would have to pay a flat fee of USD 25,000 for the receipt of IFSCA provisional approval, and then after upon commencement of business, the entity would have to pay $5,000 per activity as an annual recurring fee. So these are the IFSCA regulatory fees that the PSP players should bear in mind while considering setting up their presence in GIFT IFSC. Now, as we move on to the process for setting up any of the entities in GIFT IFSC, so the process is more or less simpler post introduction of Swift portal. So as my colleague Priya discussed, the process is streamlined across the sectors except for PSP. So firstly, we would be discussing the process for setting up a normal fintech or techfin entity, wherein the entity would first do a business use case eligibility study by having a meeting arranged with the IFSC and GIFT officials. Post business use case eligibility study, the entity would have to then identify office space within the GIFT SEZ area, finalize the commercials, and procure a provisional letter of allotment from the developer here at GIFT IFSC. Post which the entity can then start the incorporation process, and after the incorporation of entity it can then file the suite application with IFSCA and IFSCA administrator on suite portal, and then procure approval for starting the business as a Techfin or Fintech player. After procuring approval, there are certain one-time compliances like obtaining of a bond cum LUT eligibility certificate under SEZ law, which needs to be done. And post that, the entity needs to open its bank account, both foreign currency and SNRF, for its day-to-day operations. The SNRF bank account here means that the entity, since it is in GIFT SEZ, it cannot have a normal rupee current account, and for defraying its administrative expenses, it can open an SNRL account wherein it can deposit rupee and then defray their expenses from such account. Now, as I mentioned earlier, what's the difference in the process so far as PSP application is concerned? Then for PSP, the regulator here has carved out the process by saying that firstly, PSP has to apply for an in-principle approval for IFSCA even before incorporating the IFSCA entity. Meaning thereby, if an entity is desirous of setting up a PSP entity in GIFT IFSC, it would first have to straight away file an application seeking provisional registration with IFSCA without incorporating the entity in GIFT IFSC. Once the IFSCA goes through the application and the documents filed therewith, it will issue a provisional approval. Post issuance of provisional approval, then the entity would have to set up a formal IFSC private limited or public limited entity, and then post setup of that entity, it would have to procure the SEZ approval, then it open bank account, infuse minimum net worth that we discussed earlier, and then file a letter to IFSCA seeking final approval from IFSCA. Upon receipt of final approval, then the entity is good to start its business operations formally. So this was the broad process for setting up a unit in GIFT IFSC. Now we open the house for any questions and answers that the audience have.
We see some questions that have come on the chat board. We've tried to answer as many as possible. Anybody else has any question? I think Sapan had raised his hand. Sapan, you have any question? I don't know if you answered all the questions that you have asked, but any other questions, happy to take. Yes, Sapan. Yes, Sapan, we can hear you.
My question was on GlomoPay. How does the fund happen? I couldn't really understand from the slide that Harry showed. Can you explain that in detail?
So can you repeat the question, Sapan?
There, I couldn't understand the fund flow that happens for GlomoPay. Can you
I will
explain
tell
that
you
in
one.
detail?
Yeah, I will give you one more example. Say, for instance, there is an Indian company which is having an export receivable of $100 from an Dubai-based company. Okay, the Indian company will be opening its multi-currency account with GlomoPay here at GIFT IFSC, wherein it will be receiving the $100 payment on that account. At the same time, Indian entity is also having a 10 £10 payable to a UK entity. It will straight away convert the £10 equivalent USD out of the 100 USD that has been received by the Indian entity on PSP account, and GBP will then be used to settle off the UK entity's payment. So
I
this was the
understood
broad.
that part. So I understood that part there, yeah. But an Indian exporter is not allowed to open a bank account anywhere except of India, right? Even the
No, no,
EFC.
no, that has been relaxed for so far as GIFT IFSC is concerned.
Are you referring to resident foreign currency account by foreign currency account by resident individuals notification by RBI in Jan 2025?
I might not recollect the type of account, but there has been an enabling circular by RBI put in place, which allows the exporters to open bank accounts for receiving foreign currency payments in GIFT IFSC ecosystem.
Got it. And the bank account is in the name of an exporter, or like the name, the account
Yep,
name? Is it
yep,
in the name
yep.
of exporter or the PSP?
Name of exporter.
Got it. And what are the what are the other use cases of that account? Can they pay the money to a financer, let's say?
As in,
If, if they avail, say, a factoring service,
yeah,
in
but
that case,
that
the money
depends
can
on the PSP player offering you such services. That is on
okay,
the
understood.
PSP player's
Yeah.
offering.
Got it. Got it. If possible, I don't know, after the call, if you can share that circular or if you can like guide us where to find that.
So, but why don't you write to us at gift at Treelife? I'll just quickly put in. So I'm see we've already reached 4 o'clock, and I see some other
Sure.
questions. We've tried to answer the questions to the extent possible. We will share this presentation after. Um, we'll try and send the presentation after this webinar ends. I mean, we've tried to answer as many as we can. If we've missed any, please feel free to write to us at Gift at Treelife, and we're happy to connect with you guys separately. We'll end this for now. Anybody else has raised their hand? I think, hey, Ishan, I think you raised your hand. I think possibly we can take one question. I've switched on your microphone. Yes, Ishan?
Hi everyone, Ishan this side from Global Horizons. So I had one question. See, given that these PSPs, they have some sort of integration with the brokers, right? So suppose for an IPO, if at all, they're partnering with brokers to get investments routed. The other way would be to, for each investor to do SWIFT transfers individually while bidding for an IPO. If at all they integrate with a broker, then that becomes really simple. They can simply provide a link to get all of the money, right? But are there any specific regulations related to KYC or AML guidelines that the PSP has to follow, or how
Okay.
is that?
So on this point, as of now, the PSP entities are also subject to the normal AML CFT guidelines, which are applicable to all sort of IFSC entities as a whole. And for this reason, the customer onboarding part is a bit challenging even for a PSP, since some portion of the document verification is still offline, unfortunately. And for this very reason, Belong has restricted its offering to UAE as a jurisdiction. But we foresee some sort of enabling amendments or press releases from IFSCA moving forward, which would help video-based customer onboarding. And in this direction, the IFSC has also floated a consultation paper proposing to introduce video-based customer onboarding facilities so far as the investors are from 8 specified jurisdictions, which include US, UAE, UK, and certain 5 other jurisdictions. But that is a consultation paper which would most likely be notified in times to come.
Okay, thank you so much. I look forward to getting navigation to that circular as well, or consultation paper as well. Thank you.
Sure. All right. I think we'll end this for now. Thank you everybody for joining in. Thank you, Delia, for your wonderful insights, and thank you everybody for engaging. I hope to see you guys soon, and we should connect separately to be in touch if there's anything you need from us. Thank you, everybody. Have a good day.